All right, so market is in very good shape right now. Yes, of course. It was the CPI, India as well as US CPI, which came down. Then also there's a kind of a rate cut, a short-term rate cut, 2-year rate cut, which has been taken in by China. And on commentary, the further stimulus is coming, and a policy cut would also be around the corner. So generally, there is a lot of buoyancy in Asia, and after a rebound, in fact, the Nifty intraday and Bank Nifty is showing you how we are back to almost at day's high. Aditya Arora is joining us now to talk more about numbers. So there are two opinions in the market right now, Aditya. What is the fact that market has run up quite a lot and would be heading into some kind of turbulence? Okay, he'll be joining us in a moment. So there are two views which are coming. The other view is that we are actually breaking out, and whenever this kind of a data shows up, we actually add on to the rally. In fact, Shankar Sharma from the IEC sideline was saying that we are taking out new highs on Bank Nifty. Nifty is not far behind. So these two views are actually there in the market. And Aditya, tell us, which side of the argument are you on? The one who believe we are heading into turbulent zone, or further addition to the rally?
Very good afternoon. So I am in the second camp wherein I believe that market had gone into a deep consolidation. Like, we saw market doing a lot of zigzag movement for almost 20 months now. So we saw the top in October 2021, and technically if we look at the charts, then they are forming almost a rounding bottom twice, and technically and historically that has been very positive for the market. And we saw a stellar rally post COVID crisis, wherein we saw Nifty rallying from 7,500 to almost 18,800, and then market took 20 months to consolidate, took 20 months to digest that kind of a euphoria wherein everybody was getting in, and everybody was putting in the chips at very high valuation. Now earnings have caught up, and crisis is behind us. Ukraine crisis is behind us. All the news is good. Bond market is pricing in a good economy going ahead. All the brokerage houses are saying that the times are good. Probability of recession is low. So I think good times are ahead, and we are in a very sweet spot. And in fact, we are entering a glorious time for Indian stock markets, wherein the breakout would come at 18,900. Therein further we can rally 1,000 points going forward.
Yes, you're too bullish right now. That is making me nervous. First, you're saying 18,900 will be taken out, and then another 1,000 point in the Nifty. All right, we'll come back and analyze your stock idea. But before that, we have to mark the May WPI number, which has come in, which is again a collapse, slightly higher cut coming in versus what the street was estimating. There's a negative reading, -3.5 versus almost -1 in April. Well, it's not actually a surprise if you see everything is topping out. Food articles, imported articles which you saw in CPI, metal prices are coming off, freight, electricity, so much, everything is actually coming off. Demand of power is increasing, but the contribution has actually gone down in terms of pricing because there's adequate. Remember, just a while back, CA also made that point that we have surplus power. India is almost turning surplus power as well. So, Aditya, let's talk about 2-3 stock ideas from your side, which you think have very attractive risk reward to participate in that 1,000-point rally, which you see on Nifty from here on.
I think the 1,000-point rally which will come, it would be very broad-based because actually this rally is being led by Nifty small cap and mid cap. Although large caps have been quite stagnant, Reliance hasn't done quite well, but small cap index and mid cap index is rallying one way from March end. So it would be led by small cap and mid cap. And further, I would like to go to certain quality stocks also. So it's a mix and match between small cap and large cap. So the first one which I would choose would be Ethos, which is actually in luxury watchwear. So that could be bought at 1322, and 1220 should be the stop loss, and target should be 1490 and 1600. The second pick is from Metal Pack. I think the metal sector has been a sleeping giant and hasn't done quite well. again a theme which did quite well in COVID, and when the Fed started hiking interest rates and Fed was hawkish, all these commodity related sectors, came in the back seat. Now they are coming front, they are coming back in the action, and all the metal stocks are breaking out, and copper is also has bottomed out, and it's inching up slowly. So metal sector could be in limelight for foreseeable future for few months and months. Tata Steel can be bought at 113, 108 should be the stop loss, and 120 and 130 should be the target.
Right, Aditya. Obviously, these are your top picks also, but I want to just pick on one of the names, that has been buzzing in trade specifically in this week as well. When you look at that as KPI Green Energy. What is your view in terms of the charts coming in for this one? Because when I'm checking historical data, even last week, the stock has seen almost a gain of around 12% just last week. This week itself, on Monday itself, it was up 18%. Today, it's trading with gains of almost 7-8% as well. What are the charts indicating for this one?
I think charts are clearly saying that energy sector is going to be the leading sector. Whether you look at KPI Green or you look at the lowest of the lowest quality stocks, like extremely speculative counters like Suzlon, which is also doing well on back of good fundamentals in the industry and the company. And or you look at the public sector companies like PFC, REC, they are also doing quite well. So definitely it's a very positive sign that going forward, energy sector is going to lead, and KPI Green is one of the market leaders over there. Charts are extremely bullish. It's currently trading at 692. I think there's more steam for 5 to 20% rally in the medium term.
Okay, right, Aditya. Thank you so much for joining in with us this afternoon, giving us an insight on all those stocks that we should watch out for in terms of technicals as well, and your big bets on the market as well.